Hi, this is Ian Coleman from Signal Centre, and this is the video analysis for the FX majors going into the week 22nd of July 2019. Going to start off with the dollar index, run through the rest of the majors, basically highlighting what chart formations we're seeing at the moment and what we're expecting to unfold next week. I think the most important factor is the dollar index at the moment. We're seeing some very mixed and volatile intraday moves. This is causing some volatility, obviously, in the FX majors as far as the dollar-based ones are concerned. So I just want to highlight the dollar index. This is the weekly chart. Last week, we just posted mild net gains. It's actually an insider army, which is a clear indication of indecision as far as the dollar is concerned. If we go to this time frame, we're still looking for this formation, so we're still looking for this head and shoulders. The big question is, have we formed the right shoulder yet? Now we've got previous swing high around here, which is about 97.70, and then we've got some trendline resistance that's going to be coming in around about 97.89. So there's plenty of scope for more upward pressure in the dollar index. And you know, we've had pretty mixed and volatile trading last week, and if we look to this sort of, you know, for the last 10 days, we've actually come back to where we started from, so pretty little net movement in the dollar. And if we go to this time frame, and this is the 4-hour time frame, this looks like a bullish Elliott wave count to the upside. So 1, 2, 3, 4, 5. Is this now a free wave correction and a flag formation, and we break to the upside and form that right shoulder? So at the moment, I suppose there's a very mild bullish bias in the dollar index, but we've got to treat that with extreme care, with the medium to long term bias still being bearish. So I think intraday buying of dips in dollar index next week is probably going to be the play. So let's go to the FX majors. Again, you know, what is the big picture? Well, the big picture for euro dollar still looks bullish. We've got this 61.8% fib level at 111.80. This high was rejected, and again we're sort of seeing some consolidation for the last 2 weeks. If we go to this time frame though, this looks like a reverse head and shoulders pattern with a double head or a double bottom formation forming the head. So this would be the left shoulder, this would be the head, and then possibly coming down in the right shoulder. Now I've highlighted this level here, 111.72, because I think that's going to be quite important next week. The actual trend line support is located at 111.25, but if we go to this time frame, 111.73 is an intraday 261.8% extension level, so lining up with that 78.6% extension level, or retracement level I should say. So we've got a confluence area there. I think really need to look at the dollar if or when we reach that 111.70 area to see whether or not we've broken to a new high, and we can perhaps say that that right shoulder's in place. If that's not the case, then I think we could still push a bit lower in the euro dollar pair. Cable possibly forming a bullish head and shoulders pattern. We've got some support here, but again it's all down to the dollar. It's good. We're going to have to look where the dollar index is when we get down, or if we get down to around about 124.40. Dollar Swiss, different story. We've got an expanding wedge formation that has a bias to break to the upside. However, we have a ascending triangle formation which has broken to the upside. So we've got these bullish and bearish chart patterns that are really sort of throwing the intraday analysis on its side a little bit. If we go to this time frame, look like completing a 5-wave bullish count to the upside. There's no clear indication that this sell-off has come to an end as yet. We've got a 61.8% fib here, 97.11, and then an ABCD formation around about 97.78. The worrying factor, I suppose, here is that I think that Euro Swiss and Sterling Swiss are probably getting towards the end of their trend. So we could see a flip, even though we're long-term dollar bears, we could see a flip in the Swiss currency pairs and see a bit more of a push to the upside. So at the moment we're mildly bearish in dollar Swiss, but signals are far from strong, especially looking at those higher time frames. Dollar yen, we hit our AB CD formation target last week. Again, it's a little bit mixed. Are we forming a reverse head and shoulders pattern? One thing we've got a 261.8% fib level down at around about 105.90, and if we go down to this time frame, and this is the daily chart, we've got a trend line support at 106.04, so really solid down here, 78.6% fib as well. So I still think at the moment selling into rallies, wary around this area, definitely a profit taking area, with the possibility of an ending wedge pattern slowing down this dollar sell off. So at the moment we're looking at selling into rallies. Dollar CAD, we're hanging around this confluence area at the moment. We've got a 161.8% fib level here, and we've had numerous days of mixed and volatile trading. We've really got a break to the downside, and we've got this support here at 129.56. The big picture, we've got an expanding wedge, is still to the downside, but again with that dollar index possibly making a hike higher, we're still going to be looking at selling into rallies, but it could be at higher levels. Aussie dollar is an interesting one as well, because even though we've got the expanding wedge formation, so this daily chart forms an expanding wedge formation, we've seen a sell-off. We've seen a 13 count on a couple of time frames, and we've moved back down towards the cloud. Now the cloud really, for any continued bearish bias, needs to be broken into quite solidly, but when we look at this time frame, and considering the crosses, I've had a look at the crosses today, and sterling Aussie and Euro Oz looking very oversold. There's some indication that they could turn around. There's some DMARC 13 counts, so we could see a continued selling pressure in Aussie dollar. This looks like a wedge formation, got a 13 count. Like I said, it needs to break around about 170.25 to get a measured move target down towards 69.10. New Zealand dollar is also similar, so it looks like those commodity currencies could be having a bit of a turnaround. Euro sterling, I want to show you this time frame first. This is a monthly chart. Triangle formation, levels close to the trend of lower highs have found some selling interest. If we go to this time frame, we've got some bespoke support around about here, by the way, and we've also got an Ishimoku cloud that was probably formed after this previous swing low. So I think we've got a 5-wave count to the downside. Wouldn't be looking at selling at current levels. To the upside next week, we've got resistance at 90 the figure and 90.010. Head and shoulders, if we move up there, forming the right shoulder, and then to come to the downside. And again, thinking then going into the correlation with euro sterling, euro dollar and sterling dollar. So really at the beginning of the week, we should be seeing sterling weakness and euro strength, but that should be short-lived, and I think we should then see sellers return in euro and sterling move to the upside. So in other words, euro sterling moving lower. Euro yen, and I don't particularly like this call or what I'm seeing. This looks like an expanding wedge formation. We've got a 78.6% fib at 120.68. Now we've posted a 13 count on DMARC, but using correlation again, the scope for further selling if euro dollar is going to go down. There's no clear indication that dollar yen is turning around. So really, we should still be looking at selling into rallies in euro yen, but we have got a 13 count, and that highlights that the sell-off should be limited. But if we go to this time frame, going back to what we saw before, 120.68 was that fib level. 120.76 is this fib level, so definitely a support area around about here. But for bulls, or buyers I should say, to really take control of $yen, we need to see a break here next week, a clear break and a hold above 121.24. Okay, I hope you've enjoyed that video analysis, and we'll be back again soon with some more. Many thanks.